Hey everyone, and welcome to a video about the Williams percent R and how to use it for, specifically we're going to look at day trading in the beginning and then swing trading, overnight trading, and longer. Swing trading would be overnight and longer at the end of this video. And it's going to be very quick. We're just going to talk about this one technical indicator. So first, the caveat is it's only one indicator. It is not the be-all, end-all, but at the same time, it is the most reliable of every indicator, and it is never wrong as far as whether something is bullish or bearish. It just doesn't give you a time frame as how long is it going to be bullish after it gives you that signal. So by itself, the Williams percent R is accurate beyond anything. We always say that if Williams was a real person, he could watch our kids. He's so predictable and so accurate about what it shows. When it goes over -50, it is bullish, and I'll show you that in a minute. But it doesn't tell you how long is it going to be bullish for. It will be bullish as long as it stays over -50, and you have to keep your eye on it, which day traders are great at. So let's first look at day trading. And I know I have a whole bunch of things up on the screen. That's just what I always look at. We're going to look at specifically that one, this guy right there, as it associates with the actual chart above. So first, to get that on your chart, and while we're doing that, I'll move it. Go into this settings. What I did was this is my iPad. I tapped the screen to get these buttons to show up on the left. And that's the beaker sign. That would be your edit studies sign, button on the desktop, which is going to be up at your top middle right area. Once you open that up, you would do a study search, and you would just type in Williams percent R. That's this guy right here. I'm wiggling him. Once you have that added, do change the settings just a little bit, and here's why. It's a really simple signal. When the Williams goes over -50, you're bullish. When it goes under -50, you're bearish. Every single chart in the history of ever, forever will show you this. It is backwards testable. You just have to have the right time frame, and I'll show you what that means. But this is always the truth. Bullish over -50, bearish under -50. So what I do is my overbought line, which shouldn't be called overbought, but that's what they call it, I make it -50. My oversold line, I also make it -50. So that's up there in the second and third setting there. And then over here, I just have, this line is a 2 just to make it a little bit thicker. I don't know if I changed it to green or that's default, but that's just that thick green line that we like to see. So those are the two settings that matter. Once you have it, you don't have to have any of these other things, but go ahead and push OK, and I'll go ahead and, if you have something else, the way you can move it is you just push the 3-line button and just slide it on up to the top. So now we can look at it more specifically. So this is IMPP on June 16th. And for day traders, this is the key difference between day trading and swing trading. It's this time frame up here on the top left. It says 3 days, 5 minutes. If I touch it, it pops up with all my favorite time frames. These time frames are really the difference between a day trade and a swing trade. Some technicals are better for one or the other, but most of them are great for both. And then you just have to adjust your time frame based on volume to accomplish either the day trade or the swing trade goal. So in the case of a day trade, first of all, you don't look at 1 hour. So 90-day 1 hour, no. 20-day 1 hour, no. 20-day 4 hour, absolutely not. 1 year 1 day. You're not going to catch a day trade using a 1 year 1 day, because it takes the entire day for that candle to form and the technicals to become what they are, which means you've missed the entire day, which probably means you missed the big bullish action. So the day traders thing is to use the high volume, way over average volume runners, and then use the shorter time frames. So the 5 minutes, the 1 minutes, and maybe the 15s, but the 5s and the 1s, if you have a high volume day trade, are excellent. So right now I'm looking at the 3-day 5 minute. That would be the same. That would show you the same exact technicals as the 5-day 5 minute or as the 20-day 5 minute. It's just that second number, 5 minute, is the size of the candles. The first number is your range that you're looking at. I only wanted to look at 3 days. Really, I didn't want to look at much, so that's what I have it on 3-day 5 minute. But the 5 minute will show you the same technicals, whatever you have. And what we're looking at here is Thursday. I'm going to take a screenshot while I talk about it so we can see exactly the points that you want to see. It's pretty clear with the Williams when it becomes bullish and when it becomes bearish, the exact moment. So let's say you're cruising through the day, and we're going online. You're like, oh yeah, IMPP. That's the oil ticker that might come back, and it's here. And Williams is way under negative 50 at this point. That is not a buy. You would not want to purchase something where the Williams is on the floor. The price comes down at the same time. It doesn't cause it. It correlates it with it 100% of the time. It's how that technical is built. So you wouldn't buy it at that point, but you would keep your eye on it and say, all right, well, let's wait for that Williams to go bullish. And then here you come, you're in this part of the day, and you go, oh, look at that. Williams just went bullish. All right, well, there's your buy signal right there. Right as soon as it clears negative 50 is your buy signal. Let's get rid of that red circle. And actually, we can do this more cleanly. There's your buy signal, right when the green line crosses negative 50, which, if you want to draw it out perfect, I would say give yourself, excuse me, you're not going to be perfect. No one's perfect. I'm certainly not. So give yourself a range that you would like look at a couple candles, before you would notice it. But if you're a day trader, you do have to be fast. You just can't be perfect. And there you have it. So Williams is over negative 50 to correlate with bullish. And the price action stays pretty bullish. This whole period here is upwards, sloping, generally speaking. When the price starts to trickle down, the Williams goes bearish right there. So if we were to draw that line again, right there is where you would, in this day trading scenario, not necessarily sell, but that's your bearish signal. Whatever you would do in this case, some people would move a stop loss up. Some people would say that wasn't enough percentage-wise for me to get out, so I'd like to hold and see this kind of stair step. Whatever it is, a day trader would probably protect their profits and move their stop loss above whatever they bought it, but that would only be so they could buy it again without a wash sale violation, which is another thing you should look up if you're new to this. Wash sale violations. Basically, don't sell for a loss and buy it again very quickly. But anyway, so then if you were to move your stop loss up above where you bought it at, but leaving a lot of room because it wasn't enough percentage for you to be happy yet, you would be really happy when all of a sudden the Williams cleared negative 50 again right there. So all of a sudden you go, oh, I held it and the Williams went bullish for me again, so I'm safe. And this is, if you only use the Williams, this would be how you're doing this. You're not using anything else right now. So time goes on, you feel comfortable and confident because that Williams is over negative 50 and the price spikes and you're like, oh, killing it. Because that's how you'd feel. Admit it. And still, by the way, this is kind of a key point. Williams over negative 50 is considered bullish. The price can vary per candle. When you're looking at a candle, you're looking at a wick above a box, and that candle cannot just be in one tiny little spot. If it could be, actually, if it were in that spot, it would mean there was very little volume, and the technicals would be very hard to get a real reading on. But in this case, there's more volume than that, so you can see these candles are pretty big. So the price kind of turns into this. If you were in this moment in time, you might look at that and go, "That's a bullish wedge." A little bit of a flag. You can kind of see how there's like, you got yourself a flagpole. And then you got yourself the bottom of a little wedge. But even a bullish wedge is only bullish if the technicals stay bullish. If you're a bullish wedge person, I love it. I love bullish wedges. But if the Williams goes under negative 50, it's not going up. It will not happen. So let's watch. All right, trickles, back over negative 50, price goes up. And there's your end of your trade. And you had a lot of warning, and this was your first warning. If you decided to hold through it, you did get an extra, I don't know, what is that, a nickel? You can go look now. You got something, not a nickel, but, a penny or something, a half penny. It was worth it maybe, but once it goes under negative 50 for real here, which is going to be kind of right here, that's it. That's your sell signal. And you've done a very good job. Maybe not your sell signal. I should take that back because it's the wrong way to put it. Whatever you do to protect a trade, I move my stop loss up, or if I've made more than 10, 15%, that to me feels like I've done what I want to do. And so I'll be more comfortable maybe selling half or whatever. I have a lot of exit strategies that I consider. But the idea that at this point you would be someone who would be protecting a profit, not becoming a bag holder because you entered this as a day trader. You use the 5-minute time frames because it's a day trade, and you have to abide by those technicals. And if you used any other technicals, you can see they're not so great. I don't know if you learned those yet, but I have a textbook that can teach you those, or I'll put up more videos eventually, I'm sure, on the website. Stay tuned. But here we go once again. Let's just keep it going. When the Williams goes back over -50, you can follow the ruler here. Bearish, bearish. I wouldn't buy. It's under -50. The price isn't going to go up unless, here we go. Starting to go over -50. And actually, in this case, we have a kind of a unique signal. I'm going to magnify it here. Bonus content. When you have it go over -50, the next candle will get knocked down below -50. And the next candle will get knocked back up over -50. To me, that's like a pretty strong signal. Because subjectively now, objectively is the -50 bullish bearish line. Subjectively, the way I read something like this would be market makers are trying to push it down, do a little bit of a stop loss trade. But even at this point where it's fallen enough, new retail or buyers are so confident that whatever you market makers want to do, it's not enough. We're still going to push this Williams back over -50. So that double kind of move where, I kind of call it a double confirmation, where you have the Williams go up over -50, fall back down, and then go right back up. That to me is a little bit of a stronger signal. So you have it kind of going on right here with these very rapid movements, and then suddenly there's a pretty big move. And if you look at the percentage wise, let's track it here. It's 50. Let's say you get it at like 53, 54 cents. And that means you would want 0.54 cents to get 10%, which is 59. It goes all the way to 65. So you're clearing 10%. However you feel about a day trade, that's pretty darn awesome in my opinion. And you can look at any chart ever in the history of ever starting tomorrow with tomorrow's runner. This will happen again with whatever runs. The Williams will follow the same exact pattern every time. Backwards verifiable. I highly recommend using Thinkorswim because the time frames are best. They have the best organized, all the indicators you can use together, and especially on the iPad, you can actually use a lot of these together, and you begin to tell the story of what's going on in the background of this stock instead of just okay, I'm going to buy it because it's the hot ticker of the day. Even if that's the reason, great reason to buy something on the hot ticker of the day. Use the technicals and use the right timing so that the hot ticker of the day isn't when you're buying at the top. You're buying at the bottom if you use the Williams and you watch how the price crashes with the Williams under -50. Okay, it just went over -50. We're watching now, and that would be how to use that for timing. Still play that hot ticker of the day in that case if that's the way you go, but use technicals too. It absolutely will not hurt. And with that in mind, I'm going to do a second video, and I'll end this one for swing trading, but it's the same stuff. We're going to talk about the 1 hour charts. So thanks so much for listening, and look forward to hearing what you have to say.